Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday, the 18th of August. Starting off with 7 Digital, where it's a slight head-scratching situation. We've obviously had a great rise already. The question is whether there's any more. The normal thing to do is with these long candles, big moves, is to look at the previous day's close, and you can see that the shares basically bounced off. So far have bounced off yesterday's closing level. At least while we're above that on an end-of-day close basis, a retest of the best level of the day so far at 4.8 pence could be on the cards, but there is the big picture target here, which one could dare to dream of as high as that January resistance line projection, currently heading for 10 pence. As far as support is concerned, really we're looking at we can't really look much below, obviously, percentage-wise, the range of yesterday, so perhaps towards the 2.8 pence level, currently the line in the sand that one would pick out in terms of whether to remain with this situation or step aside. On to Amigo, and here not quite so difficult, thankfully. Here we've got a situation where I was going to cover the stock yesterday, but I wanted to see whether the shares would be able to get through the 50-day moving average. We've had a couple of failures in the past at the 50-day line. That's the blue line there. So we had that initial June failure there, the spike that fell last month, and now it looks actually that we've got support coming in at the 50-day at 9.25. So above 9.25, perhaps looking for a bit of a move to the upside. We've broken a triangle that one could probably draw like that, and the top of the triangle there heading towards 17 pence, 18 pence, but that obviously looks rather ambitious at the moment, but at least while we're above the 50-day line, there is the possibility of that over the next few weeks. Positive here in terms of the RSI, the way that we've kept on bouncing off the neutral 50 level, so that does suggest that this is a positive consolidation, not just a brief rally before a new leg down. Curzon is a stock which I covered some weeks back, and as you can see, there's the rising trend channel that I drew then. Obviously that was broken. Also the 200-day line was broken as well, but you can see really that move there was a bit of a slingshot maneuver, i.e. just trying to get rid of all the last of the bulls before the move higher. So we had that low there at 0.8, and then multiple lows, lower lows, mildly lower lows after that. Current situation is that we'd like to see an end-of-day close above that late June peak at 1.35, rather 1.48, sorry. At least while we're above that, we can look for a retest of today's best levels. If you're in the stock and wondering where you would sort of pull any long positions, probably that last July resistance at 1.2 is the right money management point. Above 1.2, the big figure target, or the big target here, up to as high as 3 pence at the top of that rising trend channel, which I suppose now would have a rather lower support line than I drew before. New name in the near term for the Bulletin Board Heroes is the next stock, C4X Discovery. Here we've got nice little build-up that we've had. We've had resistance there at 23 pence in April and in July. So an end-of-day close above that would be a decent starting point in order to call the shares up towards the top of the rising October trend channel as high as 45 pence. This stage, anybody back below 20 pence kills the immediate buy argument, especially given the way that all the near-term moving averages are rising. So it does look as though C4X is finally on its way. Very difficult stock coming up next, Harvest Minerals. It's been a bit of a nightmare with these false dawn breakouts that the shares have had, I suppose, over the last year, really, September, February, April and May, and I suppose you would want to say, well, if it's that difficult, one probably want to stand aside. But in the near term, we've had bullish divergence in the RSI window. We've broken out of this falling wedge here from the beginning of last month, which is a decent signal. In fact, that's around the 1.9 pence level, and that resistance line there, and above 1.9. Looking for the 50-day moving average again at 2.52. Best case scenario is that we've turned the corner, and we'll see over the next 1 to 2 months up towards the top of the July broadening triangle at 3.5 pence. Next stock is one which is rather easier on the eye and probably for traders as well. Rainbow Rare Earths. Here we've got the shares hitting the top of that trend channel that I drew from the end of February at 4.2 pence. End of day close above that would take us to a new higher ground in terms of the technicals, allowing us to project the shares up towards the top of the January trend channel there, the January resistance line projection currently pointing at 5.75 pence, and 5.75 valid while we hold above today's support at 3.5. Stock which is probably cheering a lot of people in terms of its revival is Red Rock Resources, another stock which has hit the top of its trend channel, which is quite gratifying, which means we can draw another one. End of day close through 0.85, 0.86, roughly where we are now, and it could open up Red Rock towards that November 2018 resistance line projection, currently pointing at 1.35, which would obviously be quite a result. Stop loss at the moment back below 0.75, which is the March resistance from last year. Difficult to resist looking at SupplyMe, especially given recent runs to the upside for the shares. First initial target was 0.2, which obviously hit very easily last week. Second target was 0.6, and the third best case scenario target up to 0.9, which was just filled this morning. Current view is that at least while we're above 0.7, we're looking for 0.9 or perhaps a little bit more, up towards a penny for SupplyMe. But obviously it has had a great run and the RSI is very overbought. And something for the diary, I'll be interviewing the CEO of SupplyMe on Tuesday, so we'll see how that goes and what he has to say for himself. TomCo have been a bit difficult in the recent past. The reason for saying that is that we had this extended consolidation between 0.6 and 0.8. Now it's between 0.8 and 1.1. I suppose you could wait for a break of 1.1. That might be the easiest thing to do on an end of day close basis, and then target as high as 2.4. But I can see on Twitter that the die-hard fans of the stock are already feel that the shares are on their way, and I suppose above 0.8. There is an argument for saying that is the case. Just a few to go now. Tiziana, good patent news from the company rather. Here we've had the shares interestingly breaking that uptrend line from June on a sort of 4 or 5 day basis. It'd be nice to see an end of day close today back above the 20-day moving average at 191. That should be enough to snap the trendline break that we've had and the recent break to the downside. The shares all the while still in this rising trend channel from March, and the target towards £3, especially effectively while we hold above the 50-day moving average currently at £1.46. Alien Metals has been quietly rising and doing its bit for the bulls. Here we've got another situation where the initial price channel target has been hit and now exceeded at 0.33 pence. End of day close above that over the next day or two, I suppose it should be today, could open up the shares up towards a trend line from back in May last year, currently heading towards the 0.5 pence level, and that could be seen as soon as the end of this month. This stage only really well below 0.3 pence, which was the initial August resistance, really delaying the upside scenario. Finishing off with Vissarion, where it's always good to see the bulls on the front foot, proving the naysayers wrong. Very strong candle for the stock today. So opening at the low and currently at the high of the day, that does have meaning for technical analysts. End of day close above the initial August resistance at 50 pence should bring us the 200-day moving average level at 59 pence pretty quickly, i.e. over a few days. Big picture target while we hold above the 50-day moving average as high as 90 pence, which is the top of the broadening triangle from February this year. That's it for me today. More updates tomorrow.